Alright, good morning. Let's go over today's trade plan. So in the overnight session, we were using 75 as a key support level, and the idea was that if we hold above it and then break above the 79 to 81, we'd probably get a test of the 84 half resistance. So we got within one tick of that overnight, and then responsive sellers entered the market for rotation back down. So it's a very balanced overnight session. At this point, heading into the market, we have pre-market support at 75 to 77, and if that area holds, then above it, we have the micro bull bear zone, 79 to 81. Now, in the overnight session, we've seen that the market has rotated around the 79 to 81 zone, so it's not a very, at least the way the market has been reacting to it, it seems like, we got the main reaction yesterday, and it might not be this, big inflection point on the day time frame today. So we're using it as a reference area where, if we're holding below it and we do start rejecting it, then we'll make a note of that, and we'll know that there could be some weakness coming in the market. But if we do manage to get through it, then we'll know that the strength is on the buy side short term, and the market can go up and test the 84 half to 86 half, perhaps get some rotation there, and then eventually the final upside target on the day time frame would be 88 half to 90. Doesn't mean that the market can't move above it, but at that point, that would be the main upside objective. It would be met, and any further moves could be risky as far as initiating new longs. The first test of initial resistance will probably provide a pretty decent short setup as well, because it seems like the government shutdown is already priced into the market, but there's still a lot of pending news in the market. The debt ceiling is still something that needs to be dealt with, and so there's still enough out there that I don't think we're going to get a sustained directional push one way or the other. So it doesn't mean that we can't break lower and test the support zones below, but I expect responsive buyers there. And if we break above, I expect responsive sellers at the resistance zones, with 88 half to 90 being the ideal trade location. But even 84 half to 86 half with that gap in naked VPOC there could provide some rotation on first test. So on the upside, those are our main ideas. On the downside, if we break below 75 and start holding below it, we have initial support 69 half to 71 half. Now that's an area that was tested yesterday. It was the start of the directional move, and it's an area that held in the afternoon session. So it's been tested a couple of times now, and the first test of it will probably still attract some buyers and result in a short-term bounce. But we do have to be careful at that zone to make sure that we're not heading down there on very heavy momentum. So, what we don't want to see is the market heading down there on like a minus 1100 tick and then holding the tick below zero. That would tell us that there's a decent amount of selling pressure in this market, and perhaps, we have to test the previous day's low, or more than likely that 63 quarters, 65 quarter support, and maybe the 62F gap before we can really get some, short-term exhaustion and a bounce, at least a tradable bounce of, at least, 6 to 8 points. So at initial support, it's going to require a real-time read on the market to decide whether it's a zone that, we want to be involved in. If you're short, I think it certainly makes sense to, take a scale out or just take some profit at that zone, because, it is an area that held yesterday. It is a valid support area, and it probably will get some level of rotation. The important thing will be to identify whether that rotation off the zone is a, just a very short-term 2-3 point type bounce, and then it's going to continue lower, or whether it's the end of the move. Because the trade that you put on within those two scenarios is very different, right? If it seems like it's the end of the move and it's exhausted, and the internals are not that weak and other markets are holding up, well, then you want to enter long and hold it up to 75, 77, maybe higher. But if it seems like, the sell move is just starting, right? And there's a lot of momentum to the downside, tick is holding below zero, internals continue to, head lower, then you want to actually get on board and short the bounce and then look for a continuation trade down to 66.75 or that 63.75 naked VPOC. So the two trades off that zone can be very different depending on how the market's behaving at the time, right? Depending on how strong or weak the market is in real time. And each of these zones is really just it gives you a gauge of how strong or weak the market is. It gives you targets that the market can get to, gives you high odds trade location where you can enter. If you're looking for a counter trend trade, but each zone is a gauge, right? Each zone tells you what's the state of the market, right? Like holding above 75 to 77 tells us that short term the market is at least not weak, right? It may not be very strong, but it's not weak, right? Above 79 to 81, it gives us some more confirmation that there's some strength in this market, and we can get a move up to the 84 half to 86 half. So, that's the way to view and interpret the price action. It kind of gives you a framework to interpret pure price action, without really any indicators or anything else. Just based on where we're trading in relation to each of the zones, you can get a very good idea of the state of the market, and then establish scenarios and trade ideas using that as the base. So those are ideas heading into the session. Let's see how 75 to 77 reacts. That'll give us a good idea of the state of the market. If we come down initial support, like I said, we can still get a bounce there. So we may still consider that trade. We have some econ out at 9 a.m. Central, so the first 30 minutes, could be just more of a continued balance, continued chop within yesterday's range and the overnight range. So within initial support and pre-market resistance, we could just continue balancing and rotating kind of around there. And then once the econ's out of the way, perhaps get some directional movement. If any news comes out of Washington at this point on a resolution for the government shutdown, if they pass a budget, if there's any resolution on the debt ceiling, then we could get a decent move to the upside. So you definitely want to pay attention to momentum, to the NYSE tick today, because I think that's going to give you a lot of clues as to whether you should fade a move or whether you should be looking to get on board. Because at this point the market is pretty depressed. It hit a pretty decent support area yesterday and bounced up, and despite all this negative news, it has held up pretty well. So once all these things are resolved, we can get a move back up to the 95 to 97, maybe higher, and you just don't want to get caught in the way of that if it happens today, right? Again, we never know if it's going to happen today or tomorrow or when, but if there's some sort of resolution, just keep an eye out for the news, and if something seems really off, like you get huge tick movement out of nowhere, then you probably want to stay out of the way instead of fading that move. That would be the prudent way to handle it. Because if you don't know what's happening and all of a sudden things kind of get out of whack and you start seeing some heavy movement on either side, you might want to just kind of step back, let the move kind of flush out, play out, whichever way it's going to go, then kind of reassess where the market is, and then, establish a trade idea from that point forward rather than, just kind of jumping in the way of it, getting run over a couple of times, and then finally the idea works, right? So those are the thoughts on today. Let's see how the open plays out. Again, probably going to be two-sided, but we'll be patient with the setups early in the morning. I don't think we're going to be looking to be too active before the econ, and then afterwards we'll look for some good inflection points where we can get 5 to 8 point setups.